the margins have improved from about 14% all the way to 16.5% this year. Aditya Krishna, the chairman and MD of the company, joins on the phone line to talk about that. Aditya, hi, good afternoon. It's been a very strong performance this year, 25% growth. What would be the triggers for FY20 and, what are you guiding for in terms of a revenue growth?
Hi, Sonia. As a general rule, we don't give guidance, but I'm happy to see that the market is recognizing our good numbers for last year. And obviously, this year and the years ahead, my job is to grow the business. My job and my team's job is to grow the business. So we're going to aim for at least the same growth, if not higher. I mean, that's our goal.
Okay, so 20-25% growth is what we can look forward to, Aditya, for the coming year?
Like I said, that's my goal, that's my team's goal, and we're all working towards making that happen.
Okay, let's focus on profitability then. I was looking at the trend. A couple of years ago, you were doing around 13.5%, 14% approximately. Last year was not good just in terms of revenue growth. Your margins as well improved to around 16.5%. What sort of a margin outlook, should our viewers, your shareholders, work with for the coming year? Given that, I think 60% of your revenues come in from the United States, 30% comes in from UK, and the Indian rupee has shown some strength as well. Wouldn't that be a bit of a dent to your margins?
Nigel, definitely, the rupee getting stronger, will take a little bit of, other income away from us. But, other income last year was not very significant. It was 2 crores out of 360 crores, which is not a very big portion. And as a rule, we follow a very consistent hedging policy. So, we continue to do that. So I don't see, rupee depreciation or appreciation really impacting us. What's really helped the margins, and this is important to understand, is that, we realize that companies of our size are going to struggle with visas in the UK and in the US, especially with, nationalistic movements happening in all these countries. So all our business, majority of our business is being serviced out of our offshore development centers, and that's our focus. We very quickly convert our customers into dedicated teams, developing software for them, from our centers, and that helps margins. You know very well that, offshore margins are better than on-site margins.
So what is the margin number we can work with, Aditya? We're getting the picture in terms of you've, undertaken various measures. You're talking about the offshore, shifting various verticals as well. Tell us what sort of a margin number can we work with?
You can look at a 100 basis points increase in the coming year.
Okay, 100 basis points increase. So you're looking at about 17.5% margins by the end of FY20?
Yeah, EBITDA margin.
EBITDA margins, right. You did mention that you're looking at a 25% growth this year, 20 to 25% growth. Will it be completely organic, or are you looking at some inorganic moves as well? And if yes, what would be the cash that you have, A, on your books, and B, that you've outlined for any kind of acquisition?
Our growth numbers are always based on both organic and inorganic. So we're always looking at targets. We always look at capability to drive our targets. So it's never for revenue so much, it's for capability. And all our deals are cash deals. We don't do any stock dilution, and we always acquire majority on day one. So the model that we've used in the last 3 acquisitions will continue.
So what is the cash on the books now?
We have approximately 40 crores of cash on our books, and an equivalent amount of, maybe 35 crores of debt. So net debt is, we don't have any net debt. We have positive cash of 5 crores.
All right. So 40 crores of cash on the books. In this calendar year, in 2019, should we expect some acquisition to go through?
Yes.
Oh, all right. Could you give us at least how large could this acquisition be?
If you look at our history, our acquisitions have always been, small compared to the size of our revenues, and, that's what we can afford. But like I said, we do it for capability more than revenue, and we use that capability to leapfrog revenue, and that's the result you see in the last year in terms of top line and bottom line.
Actually, the street really likes what you're saying, Aditya, because the stock is now up over 8%. You have a 60% of revenues that comes from the US and the rest from UK. Which geography are you looking to do this acquisition in? I mean, what are you looking to increase your expertise in terms of geographies?
We will stay in the same geographies, the US and the UK. So, whatever we look for will predominantly be in these geographies, and preferably we prefer the US market.
Okay, all right. Final question from my end then, Aditya. One factor that's worked for you is your dividend payout has constantly been improving with the improvement in profitability. So do you have a dividend payout ratio in place? I think if I'm not mistaken, it's normally around 20% of your DPS. And also there was some reclassification in terms of holding. And that's why the promoter holding came to around 69.5% odd. But you all have explained in the past that that's because of reclassification of the promoter holding. Are there any plans, if everything's looking so good, why don't you go ahead and increase some stake now?
Good question, Nigel. In fact, we had our first earnings call right after our results, and analysts asked the same question. Why don't we do a buyback or increase promoter shareholding? We feel that the floating stock is very small, and it's important to keep some liquidity in the market. I'd be happy to increase my stock because I believe in what I do. But having said that, I think prospects look good. We want the company to be recognized, to be seen in the market as a performing company, and I think the signs on the stock show that.
Okay, all right, Aditya, we will leave it at that. The investors and traders seem to be very excited at what you've been saying. So 20 to 25% growth is what Saksoft is looking at. Of course, all of it will not be organic. They're looking at some acquisition that may fructify in this calendar year itself. We'll take a quick break from this corporate chat, but on the other side of the break, we will talk about technicals. Ashwini Gujral and Prakash Gaba will join in with